Hey, folks, welcome to Brunch with Bob. I didn't know what to name the live stream. Brunch with Bob. Isn't that what I named it? Hold on. What did I do? Stock Market Brunch with Bob. Here we are. All right. So, feeling kind of bored. So, I figured I'd go live and do a little bit of chatting about Jay Powell's testimony today. Listen, nothing unexpected. Uh, Of course, you got the usual, the suspects, Elizabeth Warren with her retarded uh, verbal diarrhea. For the most part, these senators, these congressmen have zero idea of what they're talking about. And I think what Powell did do is he expressed his concern that there's a problem out there, and we've talked about it, and that's the rising unemployment rate. They have been rigging the numbers for a long time now, and it's bubbling up into the surface. We saw 3 months of revisions last week for prior non-farm payrolls, and last week's non-farm payroll data rose, or the unemployment rate rose, and that's the U3 number, not the U6. That's the real number, U6. Those marginally attached to the workforce. It's much higher, the unemployment rate, than what the U3, which is what the propagandists in news media use as their benchmark to measure how good or bad a president is doing. So our so-called president is doing pretty poorly. So let's talk about how stocks are reacting. Let's talk about how yields are reacting, and where do we see opportunity. So believe it or not, I'm seeing opportunity in the small caps. What you're looking at here is a daily chart of the TNA. This is a leverage product for the small caps. Now, if you don't want the volatility, simply use IWM, another non-leveraged product, and that'll get you long. You can use the futures if you want, long of the small caps, and I may use the futures myself. So TNA looking good here. Let's go to the Russell, the RUT, see how it's looking, because I think that while the markets are a little bit sloppy today, I think that we're going to get more sector rotation. Now, today, the small caps are down. Yields are up, so that makes sense. Do I think that yields are going to stay up? Probably not. Now, one thing I didn't cover yet, and I want to, remember last week, if you were on our live stream on Sunday Night Futures Live, if you're not part of that live stream, like, subscribe, you know the deal. So that way you get notified when we go live on Thursday nights and Sunday nights. I spoke about the weekly breakout of the yield curve last week. This week we expected, I just bit my tongue, we expected a pullback here. Let's go through it. Let me illustrate what I'm talking about. All right. So this is as of the close yesterday. EOD right here, EOD, that's end of day. This will not update to reflect today's price action until later this evening. So this is as of the close yesterday, weekly time frame. Now, last week, we broke out. And over the weekend, I said, expect a pullback and a retest of prior breakout. We got that. Now, I'm looking at the yield curve now. And you can see that the 2-year is up 0.012. The 10-year is up 0.035. This is a re-steepening of the yield curve. This is a problem. It's a major problem. CNBC is not going to talk about it. Fox News, maybe. Fox Business News, maybe will talk about it. They don't want to talk about it because it's fear, gloom, doom. but it's reality. Here's the monthly view, new monthly higher highs. So what's the Fed Watch tool telling us about how much the markets are changing their opinion of what the Fed is going to do in September? This is at 75.7 this morning. Last tick was 73.3. Let's refresh it. It changes quite a bit. Go back to September. So they're still factoring in a cut in September. Now, we have more data coming out this week in terms of inflation, CPI, PPI. What will that do to expectations of a rate cut? We don't know. I would think at this point in time, that inflation data would have to come in real hot, real heavy. And that may sound like a bit of a change in my tone, and it is. The reason is that I have been in the camp of they shouldn't cut rates. I don't think that they will cut rates. That's changing a little bit. Why? The reason is that, again, the unemployment rate is rising. That is one of the Fed's mandates. Employment, steady employment. Now, if you have a population that's out of work, or a good hunk of the population out of work, you can forget about re-election, and that's already on the rocks anyway. You could worry about upheaval in the streets if people don't have jobs, yet inflation is still moving up higher. This is the so-called elite's worst nightmare. High inflation, high unemployment, too many men in the streets doing nothing, and looking at them and saying, these guys aren't doing anything for us. They got to go. They got to go. That's their worst nightmare. So that's why they don't want to eat protein. I can go off on a diatribe for hours on this. So it looks as though, even though Powell, he's going to repeat what he had to say today, tomorrow when he's in front of the House. So no big change expected. And what's interesting is that the probability of an ease actually declined after his testimony. So let's go back. Let's take a look at what's going on in the equity market. I'm not going to put on any trades here on the Russell until the 3 o'clock hour. Members, I'll send out an alert. It'll be populated in the members area. I will probably do either a zebra, which is the purchase of 2 call options, deep in the money call options, and a sale of 1 at the money call option, and that helps offset some of the time decay, and it also gives you unlimited upside potential. So it's a little bit expensive to put on because it's a 3-leg trade, but it's worth every penny of it. The other strategy may just be to buy a call spread and get long of the markets using the Russell 2000 using a call spread. And what that may look like, if you're wondering, is simple. We go out past 45 days. I would be looking for a 70 delta, or the closest to right now, that would be a 74 delta. And then I would sell a 30 delta call. And that helps finance the trade. That's the 21.25 strike. And so we would be paying out $76.30 per contract to get us long of the Russell 2000 using the futures market. Or we could do this. We could just say, listen, what we want to do here is, rather than get directionally long aggressively, we could be a little bit more standoffish and say, you know what I'll do here is I'll sell a nearest the 20 delta strike, and I'll put on a junky 3 delta put. I'll buy that, while selling a put. So I'll be paid a credit of $16.35, or in this case here, on 10 contracts, that would be a deposit into our account of $8,175 immediately. So, and then we look for a breakout on the Russell 2000, and then of course we benefit from time decay. I probably wouldn't use the 52-day expiration. I would go closest to 45 days, and that would bring us down to around the August 38 days to expiration. That's week number 3 of that option sequence. Talon, welcome, brother. Did you see the Intel video? I did some analysis on Intel earlier, folks. It's posted on the YouTube channel, so you can check that out. Let's go back. Let's see what else is going on here. So bullish on the Russell 2000, despite being down. All down days are not made equal. What I want to point out here is look at this daily chart. Here you have your 21-period EMA, your exponential moving average, and your 5-period, I believe this is the 5-period, 5-period exponential moving average, which is above the 21-period. That's good stuff. We want that because we're looking for, again, this Bollinger Band squeeze to fire off. Now, the fact that we've been holding this breakout, we broke out above this level here on the 26th of June. What have we done since then? We've consolidated. That's very, very bullish. I don't care that the Russell 2000 is down. I care about what the signal is that the Russell 2000 is sending us. What it's doing is it's saying we're consolidating gains. We're getting ready here. All of these gains here, they're being digested. They sold off, took out all the stops here. Institutions got long, more consolidation. You can't rule out one last pushback to try to wipe out all the stops that are right below the support level here. And then they take it up higher in all probability. That's my bet. So that's the trade with the Russell 2000. Again, members, I will put it in the members area. If you're not currently a member, 14-day free trial offer. Check it out. There's a link below. Natural gas, we have done really, really well these past couple of days on natural gas. And we have now broken out. Actually, I'm sorry. We broke out yesterday on natural gas. This is the futures. And today we're doing a retest of the breakout point. So we're off the highs of the session. That's the reason why this is showing red. But in reality, relative to yesterday's close, we are up. 30-minute view. We're weakening up here, to be fair. We broke the 21-period EMA. That's not that bullish. So right now, we're holding it on a 4-hour time frame. I wouldn't go adding to this position yet. I would like to see, because remember, what's going on here, let's go to a daily chart. What's going on here is a maybe of a breakout. Right now, the trend is down on natural gas. So what we're looking for is a continuation breakout on this commodity, and then we look to build on positions. If it breaks down, well, we get out. Okay, that's nat gas. Let's check in with the indexes. I want to look at the Pimp Mac Daddies first. You know what? Let's do this. I want to get a vibe for how this market is trading. This is the futures. Let's bring it over to our market pulse watch list. Let's spread this out. I want to get a vibe for what's doing well and what's not doing well. All right, so we have discretionaries doing well, biotech's doing well. You need your biotechs to move the small caps up higher. This is very bullish. SPY's up. Regional banks up, which reinforces my view on the strength of the small caps. You need your biotechs, you need your regional banks for the small caps to break out. Even though that index is down at current, the two main components, biotechs and regional banks, are up. Money center banks, they're up. Utilities are up as well. Even though yields are up, utilities are up. That is a vote by the utilities traders that yields are going lower. That would be bullish for the small caps as well. Healthcare up. China up. Gold up. Dow Jones up but off the highs of the session. ARK funds have been ripping of late. This began last week. And I think that as we begin to see the small caps rally, you're going to see what you call the junk stocks move up higher. Now, no offense to Kathy Woods, a very nice person, I'm sure, a very religious person. I'm spiritual myself, but her fund is loaded with a lot of junk stocks. So as this market becomes more and more mature and we head into that first rate cut, normally that marks the top of the market. And you have your dash for trash. Again, dash for trash, meaning all the major mega caps have already run. So what's cheap out there? And I'm talking in nominal terms, dollar terms. What's cheap? They could be expensive on a PE multiple basis or not have earnings at all. What you'll have are penny stocks, junk stocks, and all that money that is coming in off the sidelines, fearing that they're missing out on something. Where are they going to go to? They're going to go to the junk stocks because they're cheap on a dollar basis. So I think that that's what's happening right now to this market. You're beginning to see sector rotation. What's not doing well? Mining stocks, gold mining stocks in particular, but they're bouncing back. They're just off the session highs. Real estate looking very good here. This is a weekly view. Real estate has broken out on a weekly time frame. Weekly chart up top here. We broke out back here in March, failed. Now we have broken back out yet again. The last time here in March, and we've been doing nothing but consolidating. What I want to do here is bring this up on the big chart and validate my suspicion. And that validation is correct. We have a Bollinger Band squeeze setting up here. This is the XLRE. Now, the play here is that yields must go down for this to rally. Now, note, Bollinger Bands in orange inside the Keltner channel. This is a beautiful setup to the long side. It's got its moving averages stacked appropriately, 5 period above the 21 period EMA, looking good on a daily time frame. Weekly time frame, looking okay. We like it. All right, so let's go back to 15-minute chart. Silver week. Junk bonds week. Dow Jones negative. I thought this was positive earlier. It was positive earlier. That came off. Qs weak. Vanex Steel down. Energy down. Bonds down. Yields up. And that's it, folks. All right. So the take on the market is this. Oh, actually, I have more to go here. Semis down. Small caps looking very, very interesting. Four-hour view. So members, we may be getting long here today of the small caps. I just want to watch the close. Technology overall down. That's the XLK. Mid caps not looking good here. Let's go daily view, see if they're setting up. No, I'm not a buyer here. I'm more bullish for change on the small caps than I am on the mid caps. Last view, let's take a look at what's performing today. This is the heat map of the S&P 500. NVIDIA, typical usual suspects up today. Apple was up. I guess it's flat now. NVIDIA up, Google up, Netflix up. That's been on a tear. Berkshire B shares finally moving up higher. They've been a laggard. JP Morgan, the money center banks looking pretty good here. Now they report earnings later this week. Wells Fargo, JP Morgan, another one could be Citi. I forget which one. Reports on Friday. Morgan Stanley, we own Morgan. That's up. Costco, as usual, is up. Tesla up again. I left a lot of money on Tesla. I was long of Tesla on a Bollinger Band squeeze. I left a lot of money on the table. My worst trade of the year, I made money on. I'm probably going to do a video on it. I mentioned earlier, utilities up. That's a good thing. Energy down. So looking at healthcare up, looking at this, you're seeing a lot of defensive names doing well. Probability of an ease is still strong. My takeaway here is that we have a market that is worried about a slowing economy, and it's reflected in this heat map. So beware. I'm not predicting a big sell-off in the market yet. Later on this year, if not into early next year, yeah, I am. However, I think that we're going to get some sector rotation, and we're going to be looking for real estate, which is broken out on a weekly time frame. I know everybody hates real estate. I'm contrarian. It broke out on a weekly time frame weeks ago, and it's holding the breakout point. That's why I like it. Small caps, I'm warming up to. Why do I like it? The big components of the IWM, the small caps, are up today. IBB, biotechs, and regional banks are up. But the sector is down. I think this is an opportunity to buy the dip, and assuming that the regional banks, and that's asking a lot, and biotechs continue to do this rally up higher, I think they'll drag the small caps up higher in anticipation of sector rotation. Numbers more to come later on today as we strategize about trades to put on here in the back half of the day. I want to wait until the final half hour of trade to do that. We'll go live with members and we'll talk about those trades. Again, 14-day free trial offer. Link below. Join us and join us on that live stream as we set up for tomorrow and the next couple of weeks with some new trades. Everybody, thank